Research and William O'Neill is with us on the show. Mayuresh, we were just chatting with Rupal of Ariel Investments, and she was saying when the going gets tough, it's perhaps time for your portfolio to hold a lot of dividend-yielding stocks. Is that and it's worked for global equities, whether history tells them that if you invest in dividend-yielding stocks in the U.S. markets in the past recessions, etc., or even in the other equity markets, it's worked. Does that work in India as well in 2023? Should one be looking at dividend-yielding stocks? And if yes, which ones?
Afternoon, Rima. So I think the arguments go both ways, right? Dividend yield stocks probably give you the comfort in terms of more payouts coming your way in case the markets go sideways. But is there capital appreciation in the underlying stock itself for the next 12 months or 18 months? Probably not, when the market probably gets very, very volatile. So yeah, I think the argument probably then goes in favor of a lot of these high yield, dividend yield stocks, that they might continue their payouts in a period of uncertainty. And a lot of these dividend yield stocks actually belong, the high yielding ones belong to the government sector as well. A lot of the PSU, oil and gas space, you've probably got very rich entrants even within the private space, or very few within them itself. So I think is the underlying strong enough to probably have business momentum and therefore even appreciation happening, or stability in terms of stock prices is something that needs to be addressed. But yes, I think energy as a space generally I think is popping up onto our O'Neill sector rotation. I just tweeted about that yesterday as well. And our own belief is that that should very well continue, with a lot of government initiatives expected to come through, specifically in terms of renewables with more capital outlay. The entire perspective in terms of strong volumes growth with a lot of capacities being built over the next few quarters, translating into superior earnings growth, might very well continue with a strong underlying dividend yield as well. So I think energy as a space, within those, I think a couple of these decent dividend yield stocks, NTPC, Power Grid, might be something that long-term investors.
All right, Mayuresh, I want to speak about some companies, that's the metal stocks. You know, if there's a dovish note that's going to be coming in from the Fed, that'll be pretty good news. And that's the hope out there. So I want to ask you about them. But before that, let's focus on a couple of these names. JSPL, well, the management joined us earlier today. They confirmed that the company is purchasing Monmouth Power's Angul plant for around 410 crores. The company told us earlier that the Angul capacity is at around 1,050 megawatt, and it will ensure cheaper power for JSPL. You know, to discuss that, earlier today, we caught up with Mr. Jha, the managing editor of the company. Let's hear out what he had to tell us, and then Mayuresh will come across for your views.
Capacity is, as you have said, 1,050 megawatt, but it is 2 units of 525 each. It is 410 crores that we have paid for the asset purchase under NCLT. And we are going to make sure that these capacities come on stream in 2 phases. That means we will be commissioning the first turbine and then the next one over a couple of years. So that should approximately anywhere between 1,500 to 2,000 crores. It should cost the first one, because most of the things are in place. The numbers are already budgeted for in our books for, with the kind of EBITDA that we are having. We do not expect that the debt should go up, as it will be done over a period of 2 years. And as you know, that the cash flows will be funded from the business itself.
Okay, all right, Mayuresh, you heard what the management had to say. For the time being, the stock is up close to around 1.5% to around 2%. What's your view in it from here on?
So some price strength still on the O'Neill lens, Nigel, around 2% odd when it comes to the RS strength on the O'Neill methodology. But 2 things are happening here. I think on the gross debt that they're carrying on their books itself, the additional outlay that might happen with the Monet buyout, though it's coming in from internal accruals, I think that will take some element of stress on the cash flows itself. They have deleveraged their debt to a large extent. So to that extent, the impact in terms of this buyout should not be that significant in terms of more leverage occurring on the balance sheet. But I think what happens in terms of the end product prices, I think that's equally important. When you go through a lot of transcripts, you're probably getting the feeling that prices at a global level, both HRC, CRC prices, have come off quite significantly in lieu of the recessionary fears. What happens with the China unlock will be a huge trigger for these stocks going ahead as well. And input costs have definitely started going lower, whether it's coking coal, and with crude going down, I think even the logistic costs have gone down. A lot of these companies, including JSPL, has also started using a lot of captive power. And Angul's captive power is to definitely help them going forward as that gets commissioned over the next few quarters. So yeah, I think a lot of these metal companies, steel or non-ferrous, including the likes of Hindalco, are having a very poor EPS rating at this point of time. Maybe a couple of tough quarters to probably bail them out as LME prices start moving higher. But yes, I think a couple of percentage points for JSPL to have that RS rating go up, come to the pivot, maybe some momentum onto that stock up.
Mayuresh, public sector banks, time to take some profits if you are sitting on profits?
Afternoon, Prashant. I believe so. I think a couple of reasons why. One, I think the kind of run that has happened in the PSU space, specifically in the mid-cap PSU space, has been humongous over the last few weeks. I think there's a lot of missed out feeling in terms of not getting in at the right time. And therefore, I think the kind of euphoria that you're seeing for these stocks is sky high at this point of time. But elementarily, I think two things are expected to happen. One, I think the NIMs might actually peak off because what we're expected to see in terms of the transmissions they have done on the advances side, as the deposit rates start perking higher, you're probably expected to see NIMs consolidate in a very tight zone going forward. The second element itself is the kind of capital advocacy that a lot of these mid-cap PSU banks are carrying onto their balance sheet at this point of time. So if one intends to replicate the growth that they probably did on a low base, I think it's going to be very, very tough with lower capital adequacy, specifically Tier 1 ratios onto their balance sheets. So NI growth will be reasonable. NIMs might be staying put in a range for some element of time. With the run-up, I think it's come close to adjusted book values for a lot of these mid-cap PSU stocks as well. And therefore, I think the entire perspective in terms of a significant run-up that has happened, I think it's away from our key pivot levels of the O'Neill lens. Our own take is that a little bit of profit being taken off the table will do no harm. So if somebody is sitting on good profits, I think some element of profit booking is mandated, at least for these mid-cap PSU stocks.
Mayuresh, did you have a look at the Sula Vineyards IPO? Is this something someone should invest in? It's the last day to invest or subscribe to.
So, Reema, normally I think we don't comment on IPOs, but when I was going through the numbers for Sula in particular, the top line has been stagnating for the last few years. If you probably look at the margin bump up that the stock has seen, specifically in the last financial year, it's a significant bump up from the normalized margins they were posting over the last few fiscals. This is something that probably needs to be taken into account as well. Yes, I think the entire culture in terms of wines, the kind of duty structure specifically on imported wines as well, that does prove to be an advantage to Sula at this point of time. But we've hardly seen any kind of growth that probably translates into the bottom line as well. And therefore, our own sense is that with the kind of valuations that the pre-IPO price is probably asking for, there is little to be left on the table for investors who probably get into this IPO. So I think we'll wait and watch on how it opens out and wait for an IPO base as per our studies.
All right, Mayuresh, hang on. Well, before we slip into a short break, there are stocks that are moving with good amount of traction. Balrampur Chini has moved to the high point of the day, currently at more than 350 rupees. Canfin Homes as well is seeing a bit of a pullback. And the other one is Polycab. It's at 3,000 rupees odd. For this week itself, it's had a rather good week. It's up 10% for the week. So Polycab, clearly the wires and the cables division is doing quite well. KEI Industries, which is a much smaller player in comparison to Polycab, well, they said that the demand for cables is much stronger than wires, though both the segments are seeing a good amount of traction. And that explains why that stock is moving higher. Just pull up a week-to-date chart. That'll give you a better picture in terms of Polycab. Good move is what we've seen on that one. Slip into a short break, come back. We'll run you through market closing.
Invest once and enjoy guaranteed maturity with life cover. with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
2 साल में रेट रॉकेट 100%.
क्या भाई साहब, get सही price trends at 99acres.com. घर लेना हो या बेचना, expert से ही पूछना. 99acres.com.
Landmark Cars Limited, a leading premium automotive retail business in India with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen and Renault, and a commercial vehicle dealership for Ashok Leyland, launches an initial public offering of equity shares of face value of ₹5 each in a price band of ₹481 to ₹506 per equity share. Bid offer opens on Tuesday, December 13th, 2022 and closes on Thursday, December 15th, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers and the stock exchanges.
उत्तरवीर कमाल दिखा अपना. कभी टेबल बन जाता है तो कभी अलमारी.
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती. दिखे चकाचक, दिखे टकाटक.
Indiabulls Housing Finance Limited announces a public issue of secured redeemable NCDs offering coupon rate of up to 9.80% per annum and additional incentive of 0.25% per annum. Tranche 4 issue is open for subscription. To subscribe, log on to indiabullshomeloans.com. For risk factors and more details, refer to the Tranche 4 prospectus available on the websites of SEBI, Stock Exchange, Company and the lead managers.
आज की पेशकश
अच्छी है, पर ये चाय रोज मिलेगी?
रिटायर होने वाला हूँ, रोज नहीं, लाइफ लॉन्ग मिलेगी, ये मेरी गारंटी है।
कुछ चीजों का साथ हमेशा होना चाहिए, जैसे HDFC Life Annuity Plans, जो दे लाइफ लॉन्ग मंथली गारंटीड इनकम। HDFC Life, सर उठा के जियो।
Will snow days be a thing of the past? Or are we smarter than that?
फूल वाला, केटरिंग वाला, बैंड वाला, ये लो भाई।
बैंड बजेगी पापा, अगर गड़बड़ हुई तो गए पैसे।
अरे नहीं रे, बैंक संभाल लेगा।
कैसे?
मैंने पॉजिटिव पे सिस्टम पे रजिस्टर किया है। बैंक को चेक्स और बेनिफिशियरीज की जानकारी दे दी है। बैंक चेक करेगा, जांच करेगा। डिटेल्स मैच नहीं तो क्लियरेंस नहीं।
अच्छा, लाइए मुझे दीजिए। फोटो वाला, लाइट वाला, मंडप वाला।
RBI कहता है
जानकार बनिए, सतर्क रहिए।
बिल्कुल सही कह रहे हैं।
Okay, welcome back. Now, the finance ministers promised to stick to the fiscal glide path. She told the parliament that the government will achieve 6.4% fiscal deficit by FY23 and is on course to achieve 4.5% deficit by FY26, also reiterating that the government is focused on inflation management. Listen in.
Fiscal deficit was estimated to reduce from 6.9% of GDP in the last year's RE to 6.4% of GDP in the current year's BE. This is very much in line with the government's commitment to achieve fiscal consolidation announced in the budget of 21-22. That is to reduce the fiscal deficit to a reasonable level till 25-26. And the current situation also very clearly gives me that kind of a feeling that we'll be able to comply with what we have said in the budget. Inflation has come and it is now come down and it is now in the tolerable band of the RBI. Inflation has been declining since April 2022 and it is declining further. CPI for November 2022 came down to 5.88% year on year, down from 6.77 in October. So I want that taken cognizance of.
That is the finance minister for you. For the markets, it's currently trading below that 18,650 marks. We're just up close to about 35 odd points. Mayuresh, any thoughts on these insurance type companies, GIC, New India Assurance? They've rallied about 8 odd%. Any news that we're missing?
I'm not sure even what I am heard on that. But generally, I think the kind of premium growth that they've probably witnessed has been pretty stable so far. Whether any announcements are expected to come through for a few of them, not really sure. But not really sure behind any news behind these moves, Ivan.
Okay, all right. Mayuresh, earlier this week we spoke, or just a few days ago, we spoke to Ramkrishna Forgings. And the management, they sounded very, very confident. They were talking about revenues going to around 5,000 crores, with the current capex itself. The market seems to be liking that. There's big scope for improvement, it appears so. What's your view on the stock? It's currently up close to around 5.5%.
The momentum can very well continue, Nigel, because I think the commentary itself was very, very strong. And on the other hand, I think the non-forging business or non-classic branch business as well, I think they're diversifying into it pretty well. So is its bigger counterpart, Bharat Forge. So I think it's going to be very, very interesting. I think the kind of numbers that get posted from the next quarter's perspective, if they do walk the talk, I think the momentum in these stocks can very well continue. But auto banks selectively are in a very, very sweet spot, Nigel, at this point of time. At Markets Fit India, obviously, we like a company called Gabriel. Very strong show in the quarter gone by. They're also getting into railways, the conversation that you were just having with Prashant. And also, I think the kind of margin profile that they've got, an expanding margin profile and an inflated input cost scenario, along with a very clean balance sheet, probably augurs well for return ratios as well. So yes, I think the momentum can continue for RQ Forging and a few auto ancillary stocks like Gabriel.
Okay, Mayuresh, thank you very much for your time. Great speaking with you. Appreciate you joining in with some of that perspective. But, well, the market will end